They're united in aim but far from agreed on how to achieve it. That's the situation in the Eurozone when it comes to banking union. New obstacles have emerged from Germany's finance minister. Wolfgang Schäuble says changes to the EU treaty are needed before union can be implemented. That takes time and effort. Eurogroup chairman Jeroen Dijsselbloem was putting on a brave face as ministers arrived in Brussels.
The Germans are putting forward understandable questions which will have to be dealt with, but I don't see why that should stop us making progress on the banking union.
The Eurozone's 17 members want a union supervised by the European Central Bank and a rescue mechanism for the bloc's banks. Some are more desperate for it than others, especially those with troubled banking sectors like Spain, Portugal and France. French Finance Minister Pierre Moscovici.
But we need absolutely to have the political will of a global union. This is absolutely necessary if we want to stop the fragmentation of the financial sector in Europe.
But analysts have heard it all before, says Charles Stanley's Jeremy Batstone-Carr.
It's really an issue that should have been addressed 14, 15, 16 years ago, but wasn't. I'm not entirely convinced that cobbling something together now is going to help, and I'm not entirely convinced that the region is going to make an enormous amount of progress on it. Is it desirable? Yes, but perhaps not in these conditions.
These conditions partly mean meagre growth. The G word is again up for discussion, as are bailouts to struggling Eurozone countries. The first €3 billion tranche of aid to Cyprus was due to be approved, as was the latest instalment of Greece's package. And there are new causes for concern too: escalating social unrest in Spain and Slovenia's efforts to avoid becoming yet another member needing a bailout.